We're really honored today to host today's release of the Harvard Joint Center on Housing Studies report on America's rental housing in 2020. We think the housing sector is enormously important to the economy, and it's great to be able to partner with Harvard on this really important work. So thank you for joining us here today. You know, as president of the Federal Reserve Bank in Minneapolis, I have responsibility for our region of the country in the nation's monetary policy making. So our region that the Federal Reserve Bank in Minneapolis represents is Minnesota, North and South Dakota, Montana, part of Michigan, and part of Wisconsin. And a lot of my work and a lot of my time and my colleagues' time is spent traveling around our region to understand what's happening in our regional economy. And then when I go back to Washington, D.C. every 6 weeks, I was just there on Monday, Tuesday, Wednesday of this week, I then speak about what's happening in our regional economy and contribute that as we set interest rates for the region, or for the nation. Now, one thing that has amazed me as I've come here is when I travel around the region, almost everywhere I go, if it's not the number one issue, it's 1, 2, or 3, affordable housing comes up. And whether it's a blue district or a red district, a big city or a small town, these problems are everywhere. And they certainly affect very, very low-income workers, but they also affect middle-class workers. I mean, a lot of people are affected, and a lot of people talk about the struggles they have as families and as individuals of finding a decent place to live that they can afford. So I've challenged our researchers here to help me understand what's going on, what's driving these problems, and what can we do about it. Now, I've learned something about monetary policy that I think is actually relevant to what we're learning about housing. Now, if you think about, I want to go into the world of monetary policy for a second. One of our goals in monetary policy is maximum employment. As many Americans as possible who want to work are able to find jobs. That's a task that Congress has given the Federal Reserve. Well, when you think about what are the responses to workers who are struggling, a lot of times they're fiscal policy. So there are worker retraining programs that the U.S. Congress may design, or the Department of Labor or a state may design. And there are other forms of assistance programs. But if you study those programs, they're very, very difficult to scale up. You know, can you help one individual worker move from being a construction worker to an electrician? Yes, it's possible. But what do you do when it's millions of workers? What do you do when it's all across the whole country? What do you do when the unemployment rate is 7%? These programs really struggle when you're talking about scale. Well, one of the things that I've learned here at the Fed over the last 4 years is that monetary policy works at scale. Over the last 4 years, millions more Americans have jobs today than, I'll be honest with you, than we thought was possible 3 or 4 years ago. How did that happen? Monetary policy was providing some support to the economy, and it created incentives for the private sector to get engaged. So today you are seeing businesses saying, you know what, you don't know how to work this machine, I'll train you. You're seeing businesses say, you know what, we used to look for a bachelor's degree for this job, now we only need an associate's degree, or maybe a high school diploma will be good enough. Or you're seeing businesses say, well, we can't find workers in our town, so we'll create a bus. We'll rent a bus, and we'll shuttle workers from another town. So thousands of businesses across America are doing extraordinary things to bring people into the labor force because it's in their own economic interest to do it. That's not to say that the worker retraining programs don't matter. That's to say that if we can create an economic environment of a tight labor market, it creates much better opportunities for these other programs to be successful. So what are we doing with monetary policy? We are activating the private sector to do what's in their own self-interest, and that's moving at massive scale that targeted fiscal programs cannot possibly compete with. And again, it's not competition, it's not one or the other, it's actually both, but we need the private sector to do their part for these fiscal solutions to work. Think of it this way, if you were running a worker retraining program to take a construction worker and say, we're going to train you to become an electrician, that's much more likely to be successful if the unemployment rate is 3.5%, and there's lots of demand for electricians, than if the unemployment rate is 7% and there's not much demand for electricians. So what does that have to do with housing? How do we work at scale? There are so many smart, thoughtful, targeted subsidy programs by the federal government, by the state, by cities, but there's just simply not enough money in any of those budgets to scale up to the thousands, tens of thousands, hundreds of thousands, even millions of Americans who need help in affording a place to live. So that's why our view at the Minneapolis Fed is those programs are all good, No doubt they can all be better. No doubt they can all be expanded, and we can learn from them. But how do we create the economic context where they can be truly effective? How do you first motivate the private sector to move in at scale? Because only the private sector can come in and actually address this problem at scale. So our research has shown, and many others have shown, that if you do build more units, the private sector builds more units, even market rate units, it adds supply to a city or a region that ends up creating space for everybody. So our focus on the Minneapolis Fed is how do we unlock the private sector to try to move at scale so that all of these other targeted interventions can now do their part. But just focusing on the targeted interventions, unfortunately, will never be able to scale up to meet the needs that we all see all across our region and all across our country. So that's what we're focused on. That's what I would encourage you as you look forward and do your work. You know, the Minneapolis is a great place to have this conference because of the Minneapolis 2040 plan. The mayor will be here later today. That's very focused on how do you motivate the private sector to come in and build a lot more supply. And we look forward to supporting that work with our own research and analysis to help them make the smartest policy decisions they can. So last thing I'll say is we recognize that for some homeowners or some workers, there's just not enough income to afford any reasonable mortgage or any reasonable rent payment. So there is a category of constituents and residents who really, they're important, where subsidies are going to absolutely have to be part of the answer. But when you're talking about broad swaths of the middle class, you can't subsidize the middle class. You can't tax the middle class to subsidize the middle class. That doesn't work. You need to actually move into the private sector at scale, and that's one of our focuses on how do we do that. So this is going to be a great conference this afternoon. This is a topic that we care a lot about, and we're going to continue to do work on, and we look forward to continuing to partner with all of you as you do your work so we can learn from you and hopefully learn from each other.